India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you as always live from the CNBC-TV18 Motilal Oswal studios, middle of the week, Wednesday morning. And there are no rains. I mean, it was that one day of rains and Monday when we came in, but no rains now. It's not dry, but overcast, sort of rainless kind of Wednesday morning here. But is it going to rain as far as markets are concerned? Because it's been a harvest out there. Day after day, markets have been making newer highs. Yesterday was no different. Where do we go from here? That's the question as we look into earnings and the budget next week. Guys, hi, morning.
Hi, morning. Morning, Nigel. It is a concern, definitely no rains, but it's raining money on the Lal Street, right? I mean, equity mutual fund flows have hit the highest ever at over 40,000 crores. Market continues to be at all-time highs. So we've got plenty of good news on our hands.
Well, that's right. And we've got a new Indian cricket coach as well. Mr.
Yes.
Gautam Gambhir takes over from Rahul Dravid. So, you know, we're two different personalities, but going to do well for the country. So all the best to Gautam.
Oh, absolutely. All the best to Gautam Gambhir, and we look forward to more cups, more championships. Well, let's just take a quick look at what you need to know as we begin another session, this Wednesday morning, that is. So I'll begin where we left off yesterday, which is at new highs for both the Nifty and the sensex. And broader markets, you know, in my book, made new highs as well. I mean, not maybe measured by what the mid-cap or the small-cap indices themselves are doing as compared to the previous highs. But really vibrant screen out there. And we've been sort of saying that every day, smaller the better. I mean, I think that's the motto. And that's not really gone anywhere. People are going down the list to find more and more ideas. Now, overnight, it was absolutely a consolidative kind of price action. So not very much happened. Equities consolidated on your screen, hardly any change, right? S&P, NASDAQ, a little bit higher. But actually, under the hood in the US as well, if you look at industrial stocks, financial stocks, they outperformed. Maybe not reading too much into it, but those are sectors essentially which do well during phases of a slowdown, etc. There's some anticipation of that going to happen in the US. Now, on yields, it was a 2 basis point jump on the 10-year. You had the dollar index, which ended slightly above the 105 levels. Fed chairs, Powell's testimony the congressional testimony was being closely watched, but it was very balanced and neutral. Markets did not overreact. So punchline, bottom line from that testimony essentially was that, you know, more good data, which is essentially softer data, softer economic data is needed about inflation returning to that 2% target levels or wherever they're comfortable. The neutral rate, it's some more distance to go. So it didn't really do very much as far as the Fed rate pricing is concerned, etc. It was, we left off exactly there. We, by the way, get the CPI numbers, the consumer price inflation numbers tomorrow in the US, tomorrow evening. And if it slows, if it is soft, I think that should reiterate that Fed cuts are nearing. Maybe in September, we'll see the first cut. But we need data to support it, as Powell yesterday said as well. Oil prices, they slipped about 1%, just under $85 a barrel is where we finally left off at. To circle back to levels here in, for our markets, Nifty yesterday broke above its previous high of 24,401. Immediately, the Nifty should head to, in the very near term, the daily upper Bollinger Band, which is 24,600, 24,595 to be precise, is the first level. And then beyond that, the targets are about 24,900. Those are extension equality levels. You basically project higher what the last quantum move has been. Supports come in at the 40-hourly exponential average, which is at 24,268. So 24,268 should not be broken on the way down. Now, Nifty Bank also had a positive day, a 0.25% higher. It's underperformed the Nifty yesterday, but it's broken above 53,003. Break above 53,357, which is the sort of last high, will confirm a further up move. And on the downside, it should not break 52,246. And again, the daily upper Bollinger Band stands at 54,064, which is the immediate kind of level which the Bank Nifty should get to if the up move really starts to materialize. I just want to leave with this last thing which came yesterday, and we sort of covered it towards the second half of the day, which is, the SEBI expert panel on F&O essentially likely to recommend a few things. Increasing F&O lot size, so basically making it unaffordable for small retail investors who trade 1 or 2 lots. So, increase this lot size by 3 or 4x as compared to the current lot size, which right now, if you want to trade, a Nifty contract or the Bank Nifty contract, is between 5 and 6 lakh rupees. And if you raise it to, whatever, 25, 30 lakhs, more than that, I mean, obviously, that will reduce the number of retail participants in the market. And the second is uniform weekly expiries. Instead of, expiries on pretty much every day of the week. NSE contracts expire Monday, Tuesday, Wednesday, Thursday. BSE 2 days a week. So instead of that, all expiries for NSE on 1 day and all expiries on the BSE on 1 day. So that's essentially what we are looking at. That's what the recommendation is. We don't know if this will go through, but lots of interest since this is, become such a hugely important part of the market out there. From a stocks perspective, it's not great news for stocks like BSE or, brokers, etc. We don't know, once again, to reiterate, if this will go through, but in any shape or form, the incremental, is going to be negative for exchanges and for other intermediaries, etc. as well. So, but more discussion on this a little later. GIFT Nifty will come up on your screen. That should give you an indication of the kind of day. I don't know, 2.5 odd point change. Will it be limited to that, or will we take up pace once again a little after opening?
I think this has been a really fast-paced market, right? I mean, it's been hitting milestones day after day, and yesterday was no different. So in that sense, it is a raging bull market that we have on our hand. And of course, big events like the union budget upon us, looks like the bulls could just continue to charge ahead. The Nifty closed above the 24,400 mark for the first time yesterday. So a lot of milestones are getting hit, definitely. In the last 1 month, it's almost a 7% rally that the market has seen. The Nifty month to month is up 1,200 points in just 1 month alone. And yesterday, as I was telling you earlier, another milestone was hit where, equity mutual funds in India hit an all-time high of 40,600 crores as per the AMFI data. You also had the net assets under management, or the AUM, hit about 60 lakh crores for the first time ever. So there's a lot of money flowing into India. And of course, we had both FIIs and DIIs buy in the cash markets yesterday. So 300 crores from FIIs, about 1,400 crores from DIIs. The Nifty Bank weekly expiry is today, so all eyes will be on that as well. A couple of other things to watch out for would be the Emcure Pharma listing. That happens today. The IPO, remember, was subscribed about 68 times. So that will be a new listing to look out for. And the US markets have closed flat, but the S&P 500 once again has hit another record high. So, day after day, milestones are getting hit. By the way, gold prices have also been moving higher. So it's very peculiar, right? We're living in a time when both equities and, safe haven assets like gold are rising. But I guess that's what liquidity does to a market.
Well, that's right, and a rational thought would be the market should pull back a little bit. But just take a look at the money that's coming in. The SIP is at 21,000 crores. The equity flows are so strong, and the FIs are not selling now. So how does the market fall? Well, time will tell. Well, let's take stock then of what the FIs did in yesterday's trading session in the F&O market. They added longs yet again. They added close to around 10,000 long positions, 10,000 longs for around 1,500 shots, and the long positioning is at around 84%. And for the last many sessions, they've been in the vicinity in that net long position of around 3.5 to around 3.9 lakh contracts odd. And the FIs, they continue to remain net long. Now they have moved to the upper end because of the addition that we saw yesterday, while clients, well, they are net short with close to around 2.7 lakh contracts odd. ITC, that stock seems to be getting its mojo back. And the last few sessions, well, it's popped up yet again. It was doing virtually nothing. And if you look at it in the last 1 year or so, it's actually lower. But just in the last few days, it's moved up a little bit. And it's tending to show signs that it wants to give up the underperformance. Maybe it's playing catch up with its peers. Valuations are fairly okay. And maybe the street believes that, there's no risk with regard to any kind of tax tinkering in the upcoming budget. Those are the data points which explains why the stock has moved up. And on a weightage parameter, well, it's moved up a little bit. Remember, last year it was at around 4.7%. Weightage on the Nifty is what I'm talking about. It moved down to sub 3.5%, but now it's moving back to around 4% after the recent rally that we're seeing. So ITC, that's one stock that could support even going ahead, just going by the data points that we have got. The other one is the HDFC and Reliance. Both of them were battling for the top slot on the Nifty. HDFC is still in the lead. Just a week or so ago, the difference between HDFC Bank as well as Reliance's weightage on the Nifty was around 2.3%. Because of the outperformance of Reliance and the underperformance of HDFC Bank, that's narrowed down to around 1.4%. So that's the reason we're seeing a bit of a narrowing, and Reliance actually looks good for more. So let's see whether or not HDFC Bank can take some kind of support, because we've seen in the last few days around the 20-day MA is where it's hovering after correcting closer on 6-7% odd. Moving to the levels then, well, we're looking at the Nifty Bank, which would be the moving factor today. It ended higher with a gain of around 150 points, but it was underperforming in trade yesterday. Today it plays out the weekly expiry, so that's going to be a bit of a mover. And HDFC Bank, obviously, because of its large weightage, will be in focus. The levels, it continues to remain a buy on dips market, supported around 24,000 odd, 20 DMA as well, in that vicinity of around 23,800. But as a stock-specific market, as I said, so I'm looking at Hindustan Copper. Yesterday, towards closing, we said that the data point suggested it could be coming out of the F&O ban. And by the end of the day, that was confirmed. So normally when a stock comes out of the F&O ban, we do see some kind of action. So Hindustan Copper is one stock that I'm looking at. And a cash market stock that I'm looking at is Greaves Cotton. In the last few days, the stock has seen a big increase. I think in the last month or so, it's up close to 25-30% odd. It's moving on very, very large volumes. And the auto theme came back yesterday. It's moving on very, very large volumes. The street is sensing something, maybe in fact something in terms of the numbers, or maybe in fact some kind of action from the company. But the volumes are very, very high, and the delivery-based volumes in July so far is nearly 5x of what we saw in the month of June. So that's a cash market stock that we should be tracking as well.
Okay, Nigel, thanks a lot for that. So plenty of stocks to talk about today, and plenty of market-related data as well that we'll be analysing over the next 2.5 hours. But first up on the equities front, Surendra Goyal of Citi expects a 2% year-on-year Nifty headline earnings growth and flat growth for the Citi universe, excluding energy. He says Nifty earnings are expected at 8% year-on-year and EBITDA growth at 7% year-on-year, while the Citi universe earnings are expected at 14% year-on-year and EBITDA growth at 9% year-on-year. In FY24, he says earnings surprised their expectations meaningfully in all 4 quarters. He says the question now is, can this trend continue? He also says the market will focus on budget announcements, monsoon trends and management commentary on consumption trends. He says domestic flows trends remain strong, and post the 26% returns in the last 1 year, he expects the markets to consolidate a bit. He also says they would buy any dips. Their June 2025 Nifty target is 24,400 based on 19 times 1 year forward PE.
All right, well, we have Mahesh Nandurkar of Jefferies who weighs in as well. He says that June quarter should see earnings growth slow by 1 percentage point quarter on quarter to a 16-quarter low of 12%. 12% year-on-year growth. This is for the Jefferies coverage universe. This excludes oil and gas and metals. This is as elections and a harsh summer may have impacted multiple companies. He says domestic, excluding financials, are likely to post 12% EBITDA growth and flat margins year on year. He says pre-quarterly earnings reports suggest slowing loan growth, some rural demand improvement and uneven discretionary consumption. He thinks 20% plus earnings growth for auto OEMs, summer beneficiaries, which is power and AC companies, property and select industrials, is likely.
Okay, let's also get you some money market views this morning. On the rupee, Kunal Sudhani of Shinhan Bank says the US dollar bounced slightly after Fed Chair Jerome Powell remained cautious on rate cuts, despite acknowledging that the US central bank's dual mandate risks are more balanced. Crude prices also cooled off, and the dollar found support at 104.7 levels. For the dollar INR pair, Kunal sees 83.40 as a support, while 83.55 acts as a resistance.
On bonds, Neeraj Gambhir of Axis Bank says that the 10-year G-Sec traded in a narrow range of 6.98 to 7.03% with low volumes in absence of any domestic cues. Downward trajectory of US Treasury yields continued in the back of ISM services, PMI, non-farm payrolls and unemployment data. This further buoyed US rate cut hopes in September. Neeraj expects the Indian 10-year benchmark bond yield to trade in the range of between 6.95% to 7.05% and takes cues from CPI data due this week.
Well, a lot of stock-specific action track for you. We get to that in just a bit in further detail. For the time being, we run you through the list. We're looking at JSW Steel, Mankind Pharma, Delivery, KDDL, Havells, Infosys, Adani Ports, RBNL and KIMS. 9 stocks expected to open up in the green, while the lone stock that is expected to react to negative numbers, that is Delta Corp.
All right. Well, we have someone who invests here in the Indian market and runs a large book. Conrad Saldana is Managing Director and Portfolio Manager at Neuberger Berman. Conrad, good morning. Great to have you with us here as always. Thanks very much for your time. Prashant this side. Conrad, the market sentiments are buoyant. I mean, I think I could use more adjectives to describe what's going on. And it's not just the new highs on the Nifty or the bank or the sensex or the the frontline indices, right? It's really about stocks and the hunt for ideas and people kind of willing to look beyond what they've traditionally felt comfortable looking at. And I think that's showing up across the board. Broadening out. I mean, I think in the US you can say it's AI stocks leading the charge higher. I don't think you can make that accusation for India. It's a very broad-based move, Conrad. So I just wanted your thoughts there. And are you also willing to, or have you also started to look at stuff that you've not traditionally looked at because of whatever reasons?
Yeah, I think, Prashant, thanks for having me on. Yeah, we've already looked, fairly behind the headline names. Historically, and you had an opportunity in March when the market sold off. Right now, obviously, we're at a point where the multiples are not as conducive as they have been. But if you take a longer-term view, maybe it's a time correction on these names. That might be utopian. And maybe it's an inflation print that brings a little bit of jitters into the market that gives you that opportunity. But I think we've already looked at these interesting mid-cap opportunities, knowing the promoters well, the businesses that we believe are going to execute. It's the same names. I don't think I definitely sticking with a quality bias. I would not start to go down the quality spectrum in terms of businesses, more cyclical type of ideas. In my mind, I'd come back to saying that the financial sector, which hasn't really taken part in this big rally, I think that looks to be more defensive, and growth looks good for the private sector operators. So again, ICICI is named. We've owned Industry and hasn't really participated in this. Those to us are good businesses, going to continue to grow, and haven't really participated in this big rally.
Okay. Conrad, thanks a lot for joining in. A lot of milestones are being hit in this market, right? Another big development yesterday was that equity mutual funds saw the highest ever inflows at over 40,000 crores. And SIPs as well have seen highest ever flows coming through. There's something that the retail community, the domestic community is bullish on in the Indian markets. Is it the fact that the budget this time around has more leeway for populist measures, has more leeway for putting more money in the hands of the middle class? And what is your own expectation of the big event?
I think the budget is definitely what has people excited, right? Given that the market's already done well into this, barring the wobbles after the election results. Definitely, there could be, I shouldn't say definitely, but there potentially is the possibility of some more stimulus. But I think the government has been pretty measured in terms of keeping an eye on the fiscal. So I do not see a major trend that's going to change that. Potentially a shift in the mix. If you start to see better state finances, the deficit probably improving by 20, 40 basis points, you could see some of that being recycled. But one of the areas has been rural consumption, which has been soft. You could see some stimulation of demand there, but I would not think it's going to be a blanket deterioration on the fiscal in terms of the spending power. But consumption for me is an area, obviously, of focus where it has been soft for an extended period of time. Given the hikes that you're seeing with the telecom sector, that might only be 20 basis points on an inflation stat, but it probably matters, especially as you go down the income pyramid in terms of how much that's going to bite into the pocket. So we'll have to see potentially is there some relief for the consumers. But I would still go with the view that they are concerned about inflation. They're concerned about, obviously, external factors. You've seen how strong the dollar is. And so I do not see a major slippage or deviation from policy, potentially some tweaks. But again, I'm a bottom-up stock picker, but that's my view of India being pragmatic.
All right. Hi, Conrad. Good morning and good to see you. When valuations seem to have run up a little bit, but there are still some opportunities in the markets. And as you said, you're a bottom-up stock picker. What about tech? That's come back in a big way. The last 1 month or so, it's been a big outperform in comparison to the Nifty itself. I think the Nifty IT index is up 15%. It'll be bracing for a couple of numbers. How are you placed on the tech space?
On the tech space, Nigel, we were more conservative, given that we saw earnings, especially revenues, start to get impacted. You're seeing budgets from enterprise side being a little tight and more concerned, given that they had to allocate to this whole AI spend and trying to get all those GPUs. There's a massive allocation of capital that's gone there from these IT budgets globally right now, as CIOs are trying to figure this out. So what it meant that the IT service bids were taking longer to close. They were getting pushed out the scope. Some of them getting reduced, but also getting probably pushed out and cancelled. So you're seeing a lot of these deferments coming through. But my guess is those are being factored in. And now you're looking at an opportunity where, for folks in the nearer term where the whole market has done well. These have been big laggards. And there's a narrative that software and services are later cycle businesses that should see some benefit with this AI spend. But I think it's too early to call that as a proper shift. But the valuations start to look more conducive, given that the market broadly, barring, I would say, tech, financials, I would probably put in pharma into that space, and consumer stocks haven't really participated in that rally broadly. And so I think you're seeing a little bit of money flows helping that sector more than a major shift back in fundamentals.
Conrad, sorry, go on. Please finish that point.
Sorry, I was going to answer, Nigel, to your point that where we, on our tech exposure has really been, as we mentioned before, it's been on the EMS side. So on the manufacturing, which continue to execute well. We also have a software exposure through Orient Pro, and that's a good banking software business. Those are where our exposures are. We are seeing really solid growth coming through.
So Dixon, Keynes, some of the EMS manufacturing kind of plays, I'm assuming you still own. Jyoti CNC is a name you've spoken about. Venus Pipes is something you've sort of outlined earlier. Orient Pro, I think, that you just sort of mentioned. And of course, the big banking names, right? ICICI and HDFC Bank, etc. So that's some of what you own in your portfolio. Got that?
With some of those, Prashant, we probably, our preference on the banking side has been ICICI and IndusInd Bank. I think, like I mentioned historically too, HDFC is just a longer term runway in terms of the merger being digested.
All right, fair enough. We'll leave it there. Good speaking with you. Good chat as always, Conrad. Appreciate you joining us here on the program. Thanks very much for joining us. We'll take a quick commercial break here. Our list of top stocks to watch out for. Our research team will get you that. We're back after a quick break.
Welcome back to Bazaar Morning Call. Hope you're having a good morning of trade. What a time to be an investor in this market, right? Record highs for the market, 24,400 for the first time ever. And June was actually a watershed moment for the Indian mutual fund industry as well. We saw that AUM of 60 lakh crores hit for the first time ever. So lots of traction seen. But we have our entire research team joining in now to help us with the list of top 10 stocks as we begin a brand new day of trade. Gentlemen, morning to all of you. Nigel, first to you. You're looking at JSW Steel?
Well, that's right, Sonia, because they came out with their quarterly update and the production numbers are out and no big negative surprises on that front, more or less on expected lines. So the combined steel production, that's India as well as the overseas operations, that was down by close to around 4%. The India operations were down by close to around 1%. And the capacity utilization levels for the India business is relatively okay at around 87%. They've gone on to mention that they had a capacity shutdown, a plant shutdown. So because of that, there was a bit of a degrowth. No big negative in these numbers. Sentiment has been a little bit weaker, but that's because of the monsoon. Going with a tinge of green on this one because there's no disappointment on any parameter.
Okay, all right, got that. Well, let's move on. Sudarshan is joining in to tell us about some block deals that you should be looking at this morning. Sudarshan, over to you.
Morning, Sonia. So, two block deals that might take place in today's block deal window. So, first is Mankind Pharma. Capital Group affiliate HEMA CIPF is likely to sell 0.9% equity via block deals, and issue size for this block deal is rupees 763 crore and price is rupees 2061 per share, which is a discount of 2% to CMP. As of March 2024, HEMA CIPF holding was at 2.22%. Next is Delivery. Canada Pension Plan Investment Board may exit the company, and in today's block deal, it might sell 3.17% equity, and this block deal comes after this fund had sold almost 3% stake in April, and for today, issue size of the block is rupees 886 crore and offer price range is rupees 378 to 389 per share, which is a discount up to 3.5% to CMP. As of March, the holding of Canada Pension Plan Investment Board was almost 6% stake in the company.
Okay, all right. Thank you very much, Sud, for that. But let's also focus on Delta Corp and KDDL. Mangalam is standing by to tell us why. Mangalam, morning.
Good morning. So Delta Corp reported their first quarter numbers, and first quarter is a seasonally weak quarter anyway. So add to that, there was a perfect storm of bad news for the company. The first one was, of course, higher GST, elections and heat wave impacting their casino operations. And secondly, there was weakness in the online skill gaming business as well because of higher customer incentives. So if you look at the overall revenue of the company declined by about 30%, and that's had a bearing on their EBITDA as well, which is down 68%, as a result of which margins compressed all the way from 37% to 17%, and the net profit fell by 68% at just around 22 crores. It was a decline both quarter on quarter and year on year. If you look at the segments, casino, the revenues declined by 25%, with EBIT declining 62%. Online gaming, if you remove the incentives that they gave to customers, so the decline is almost 88%, and that's reflected in the online gaming losses as well. And hospitality too, as a result of which was down about 17%. Regulatory uncertainty continues, even though the company still hasn't made any provision for the big GST demand that they had. They believe that they can get out of the woods on that one. So as a result of which, going with red on Delta Corp, especially because we had seen a bit of a rally a couple of weeks ago as well. KDDL, on the other hand, has gone ahead and approved a 90 crore buyback. They'll buy back about 2% of the equity at 3,700 rupees via a tender offer, which is a 12% premium to its current price. But remember, at 2%, the acceptance ratio would be a lot lower. Promoters take at 50%. They are included in the buyback as well. But the other thing to watch out for KDDL is the fact that it is the promoter of Ethos and holds about 3,100 crore worth stake in the company, as against its own market cap of 4,200 crores. You obviously have to give some holding company discount.
Okay, thanks a lot for that. So Delta Corp and KDDL on our radar, but Upasna is joining in to tell us why you should be watching Havels this morning. Upasna, over to you.
Good morning. Thanks so much for that. Well, the company announces expansion of its manufacturing capacity of cable with an investment of 375 crores in order to cater to the increasing demand, is what the company has indicated. It plans to expand capacity of cables to 41 lakh kilometers from 33 lakh kilometers in Alwar, that is in Rajasthan. The existing capacity utilization is around 70%, and the proposed capacity will be added in a phased manner by March 2026, is what the company has indicated. Hence, I expect the stock to open in green today.
Okay, all right. Thanks for that, Upasna. Well, let's wind this down with Vivek, who's joining us with some more stocks and news. Morning, Vivek.
Well, good morning. Quite a few stocks, that have had news flow coming in post-market as yesterday. First on our radar, Infosys, a long order win is what the company has received. It's a 5-year order win that the company has got from a company called as Sector Alarm. This is a European-based company. It's a security service solutions provider, and it's partially owned by private equity company KKR. So Infosys will help the company to migrate the ERP platform that it currently has to the Microsoft Dynamics Finance and Operations. The other stock on the radar is Adani Ports. The company has received a letter of intent for berth number 13 at Deen Dayal Port. The company will operate this particular berth under the DBFOT basis for multipurpose clean cargo, including container cargo. Now, this particular berth has a capacity of close to 5.7 million metric tons per annum. Also, keep an eye out for KIMS. Now, the company has gone ahead and acquired a 200-bed hospital in Vizag for 75 crore. The acquired company had revenues of close to 62.5 crore for FY24. And lastly, watch out for RVNL as well, another MOU that the company has signed. This particular MOU has been signed with Tatweer. Now, this is a Middle East as well as African company. This particular MOU is mainly targeted at using RVNL's expertise in the railway sector for joint design and execution of various rail-based work in the MENA region as well as European countries. RVNL is also in focus. It's received an order of almost 187 crores. This is for Nagpur Metro, where the company will be going ahead and constructing 6 elevated metro stations. So expect some green on RVNL today.
Okay, thanks a lot, Vivek, for that. Well, here's a quick recap of our top stocks with positive news flow. There's JSW Steel, Mankind Pharma, Delivery, KDDL, Havels, Infosys, Adani Ports, RVNL and KIMS, while Delta Corp is the stock on our radar with negative news flow. But let's do one thing. Let's hop across to Manisha Gupta to tell us about all the action from the commodity markets overnight. Manisha, good morning.
Morning, Sonia. Thank you for that. I'll start with the crude oil prices, where we did see 3% of decline in prices in the last 3 days, but it really seems to be consolidating right now. The Hurricane Beryl is out of the way and hasn't made much impact on the oil facilities, and the Canadian wildfires seem to be lessening as well. But the street will watch out for the U.S. crude inventories data today, and there's an expectation you could be looking at a second straight week of decline here. Also, a very interesting report from EIA suggesting that the global oil demand will outpace supply in 2025. I mean, the market will watch out for more numbers to that effect, but that can take the crude prices higher from where we are right now. Well, after the Powell testimony yesterday, where he talks about or cautions over leaving interest rates at too high a level, there is some strength in US dollar index, and that's weighing on commodities. So gold and silver is off its highs. Copper is off the 1-month high it was trading at. Iron ore and steel prices also has gone in for some profit taking. The markets will watch out now for the US inflation data that comes in on Thursday.
Right, Manisha, thank you very much for that. We'll take a break. We are back. Deven Choksi of DR Choksi FinServ will be joining in with some fundamental stock check. Stay tuned, that's coming up.
Welcome back. You're tuned into Bazaar Morning Call. Well, we have listed down all the top stocks you need to track, but Sudarshan is joining us because he's gone through a whole host of brokerage notes. Morning, Sudarshan.
Morning, Nigel. So I have 3 stocks in today's Brokerage Corner. First is Supreme Industries. Jefferies maintains buy call and target is raised to 6,700 from rupees 5,390 per share. It says in April-May, volumes have grown by 22% year-on-year despite a high base, and sales growth were at 12% impacted by PVC volatility. It says a focus on value-added sales may aid the margin, and it expects company to be a good play on housing, capex and agri, and it estimates 25% plus EPS CAGR over FY24-27. Next is GS on Credit Access Grameen. It maintains buy rating with a target of rupees 1,784 per share. It says test offers limited downside and risk reward is favorable. In the base case, it expects company to deliver PPOP and profit growth of 26%, 23% over FY24-27, and expects average ROA and ROE of 5.4%, 23% respectively over FY24-27, and expects company to meet the guidance that company has given for FY25. Last is Investec on BSE. It maintains buy call with a target of rupees 3,400 per share, but it has closed its long fast call that it had on the stock due to regulatory risks. It says regulatory risks may outweigh benefits of rising volumes, and if regulatory changes are implemented, it will impact its forward estimates, and company aims to protect profitability through higher market share and lower clearing charges. So these stocks might be in focus today on the back of brokerage's views.
Okay, thanks a lot for that. Well, Deven Choksi joins in. He's the Managing Director at DR Choksi FinServ. Deven, hi, good morning and thanks for joining in. It is really a momentous day, week, month for the market, right? Fresh milestones are being hit. But if you had to create a shopping basket now of stocks, either large or mid-cap, where there still seems to be some more valuation headroom and where growth prospects are looking good, what would your list look like now?
Hi, good morning, Sonia. Well, I think the list would start with particularly the large banking and financial companies, including the NBFCs, largely because of the fact that as we see the growth in the economy unfolding and unfolding at a rapid pace, some of the larger institutions who have got ability to lend bigger sum of money to the borrowers, they are the ones who are likely to be, I think, the biggest beneficiary. Be it likes of Bajaj Finance in NBFC space or be it SBI, NBFC Bank in the banking space, who are having the larger AUMs, I think are likely to grow and grow bigger in next 3.5, 4 years time. Most of these companies are actually reporting growth in excess of around 20% from the AUM growth perspective. Bajaj Finance kind of company continues to clock at around 30% plus rate of AUM growth on a month year-over-year basis. So from that particular point of view also, I believe that I think these companies are very well positioned. Not to forget one more thing, that I think they are also having some of the larger franchises under them which are listed. And they are actually, I think, generating monetization abilities for these companies. So this is one sector which we like, I think, from the investment perspective, even in this market, because valuations are not very expensive. Otherwise, I think consumable or consumer segments, discretionary space, particularly, I think the auto ancillary remains one among the favorites. Of course, I think most of the stocks are adequately priced today, but some of the auto ancillary companies could possibly give relatively better return going forward. And last but not the least, I think some of the mid-tier IT companies which are in engineering R&D list, engineering R&D space, and on some of the niche areas in the auto and aviation space, those companies are reasonably looking sure from the point of view of reporting around 25% kind of CAGR growth in next 3 years' time. So we selectively buy some of these companies, even though some valuations are at a higher level. But I think, yes, any corrective market, they give opportunity to buy into some of these companies.
No, got that. You know, Devin, hi, morning. What's your views on Maruti, which I'll get to in just a bit. It was a big mover yesterday, right? 7% odd. But I want to start by asking you about your thoughts on the on what SEBI expert panel is likely to recommend a lot size increase and we sort of just to curb F&O volumes. You know, I think the really negative thing would have been if they one of the suggestions was, which we don't know if it is there, but it's not been reported yet, is to sort of remove contracts, you know, themselves instead of sort of having expiry on one day. Given what we've seen so far, and we don't know if this will go through or not, what's your sense? Stocks like BSC and some of the broking companies, broking stocks which have done very well, Devin, go on.
Yeah, Prashant, good morning. Well, I think I have seen the derivative market since the birth, I think, and we have probably, I think, seen how exactly the entire derivative market got structured with a minimum lot kind of applications. I think we have lived this particular era. Today, the time has come wherein I think you need to free this market. I think there should not be any requirement for any market lots. I think if you want to actually indeed curb the speculation, the better ways are available today. Like, I think you have an underlying portfolio. You cap, I think, the speculative activity to the underlying portfolio. So that at least, I think, you will not see the manipulation in the market lock, stock and barrel, which we are currently seeing in some of the smaller and mid-sized companies, where probably these companies are quoting at a valuation of 100, 150, 200 times price earning ratio in some of the cases. I think that is where probably the corrective actions are required to be taken. You look at Nifty 50 baskets of companies, you never find, I think, irrational valuations in these particular companies, largely because of the fact that the derivative market is active in those companies, and that is where probably I think it's a leveler, as I see. I think instead of, I think, tweaking around with the market lot size and creating a roadblock like this, where the volume is threatening to get shifted to, I think, the dabba trading, which is a nuisance. I believe that I think this particular subject has to be, I think, taken a little bit more seriously these days now. Maybe I think we have lived with the market lot concept, which is now time to peg the entire derivative business, I think, along with your investment portfolio. You already have every stock under demat, and I think it is easy to, I think, match investment portfolio to the exposure that one takes, I think, in the market. It will automatically restrict the market practices. At the same time, I think the risk management also will be more prudent than what it is currently.
Got that. You know, Devin, stay with us because we also have Rajesh Baheti on the same topic. He is, of course, Managing Director at Crosseas Capital Services. Rajesh, good morning. Good to have you with us here. You know, some of what has been, what's being reported in terms of what SEBI panel is likely to recommend is stuff that I think you were very much in line with as well, right? Which is increasing the F&O lot size. That's the most obvious, gets the most play. But there are other things, one expiry per exchange per week. And a few other things. Just your thoughts on what you've seen so far being reported as suggestions, Rajesh.
So yeah, first let's put some things in perspective. When we report that we are doing 80% of the world's market turnover, I think let's put that in perspective first. For example, if you take the lot size of the E-mini S&P, which is the E-mini S&P, that's about 2 crore 33 lakhs today versus 5 lakhs. Is the lot size in India. And therefore, if I do 5 lots and the S&P does 1 lot and I report that I'm doing 80% of the volumes in the market, I think that is a wrong way to look at the markets. So you've also got to look at the lot sizes and the total turnover by way of premium rather than reporting a number of lots traded as market share. So first thing, let's get things in perspective. Secondly, I think SEBI has clearly spelled out a problem statement that they have a problem with the lowest rung of retail entering this market and trading and getting attracted to trading, maybe getting addicted to trading. So 2 things. One is that I think today there are many other ways to get addicted. If you look at the scores of websites offering gaming on cricket, on poker. So maybe a study needs to be done as to how many UCCs are active in the F&O segment versus how many people are trading or speculating or playing those kind of gaming stocks and are part of that. So I think a little bit of perspective there would also help. The second thing is, if you want to attack the lowest rung of retail, you've got data on the number of UCCs that are trading the market today. If you want to get rid of, say, 20% of these, I think the best way to do it is increase the lot size, and that's a global pattern also, that the lot sizes in derivatives are higher than the lot sizes in the underlying market. So increase the lot sizes, and B, maybe set a financial liquid net worth criteria to be able to do F&O. And if somebody below that criteria were to do that, maybe specify an exam or qualification to be passed, because if you have the knowledge, I don't think finance should be restricting you. But what we're discussing today is so many variables that we want to play around with. I think that is where I fear that we are heading into a territory which could have unintended consequences. We know what has happened with the currency derivatives market. It took 15 to 20 years to build a market and one guideline to finish it. So instead of attacking many variables at the same time, I think just putting a little bit of a filter for retail, I think for the time being can do the job. You can always take data after you've done this.
Right.
And
Rajesh, no, got it. But I think what is being proposed is, I think, in line with what you were saying, increased lot size, right? That's one. Restrict weekly options, to 1 expiry per week per exchange. And limit the number of strike prices for options, upfront collection of options premium, something I think you've also advocated for, intraday monitoring of position limits. So these are all, I think not really out of the realm of what you yourself have been advocating, right?
No, not at all. If you restrict, let's say, option expiries to 1 per exchange, now I tell you what is the problem. The NSE has 2 very active contracts, which is the Nifty and the Bank Nifty. The BSE has 1 fledgling upcoming contract by way of the sensex. Now, NSE has a market share of 80-90% in this market even today, and the BSE is 20%. Now, if you tell the exchange that you can only do 1 per contract, 1 expiry per week, you are actually giving BSE a chance to become 50% of the market, and by not by a very fair means, because you're telling NSE that you have to choose between the Nifty and the Bank Nifty, which are actually today the 2 most liquid contracts in the market. You choose one of them, and that then leaves the door open for BSE to come in. On the other hand, if you restrict weekly contracts totally, then I think the BSE would stand no chance at all to get any sort of market share. So I think these kind of measures are not advisable. In my
Rajesh,
opinion.
but why would you put NSE at a disadvantage? I mean, if say for example all contracts expire on a Thursday for the NSE, everything on Friday for the BSE, right?
No, so the way is that capital gets rotated. Now, if I have 100 rupees of margin, I can only choose the $100 to be spent or utilized for certain contracts. And we all know, and this is a global phenomenon, that the shorter expiries attract more volumes and more intraday and special, HFT volumes. And if you were to restrict an exchange to one contract per week, then you're going to get a situation where the contract that is not the weekly expiry will completely die down. So I think, asking NSE to choose between Nifty and Bank Nifty would not be fair to NSE.
But surely this is better than withdrawal of weekly contracts, right, Rajesh? Because that was one fear.
If your problem is with the lowest rung of retail entering the market, why are we finding solutions that might have unintended consequences, like, destroying a segment of the market or destroying a product? We know how easy things can get destroyed. We've seen that happen in the recent past. I think if the problem is the retail, the solution lies in just putting some entry barriers to the lowest rung of retail. I don't think SEBI has a problem if a rich guy comes there and loses some money.
Yeah. No, got that. So the weekly options to one day per exchange per week. I mean, that's essentially. But some of the other things that I mentioned, anything you have? Is there a pushback to any of the other measures?
Yeah. So in 2019, we moved from a very unscientific way of margining to an extremely scientific way of margining. And in return for that, we went to 6 sigma from 3.5 sigma, which makes us today the most margined market in the world and the safest F&O market in the world. And to fiddle with margins, I think would be counterproductive, because you're going away from science. I think something that are derived statistically should not be used as administrative tools to control markets. I think I'm completely against use of margining as a tool to manage volumes in the market, because all you're going to do is distort the science behind the application of margins, which is to contain risk, and be not allowing exchanges to freely launch contracts, because I think if you're allowing exchanges to list themselves, they are competitive and for-profit entities, and they owe it to their shareholders to find ways and means to increase shareholder wealth. So I think those kind of controls, I would not be in favor of.
Okay, got that. Rajesh, sort of short conversation today, but we'll have you back because, these are suggestions. These are likely recommendations by the expert panel. We don't know how many of these will go through, but what you're saying is raise the entry barrier, larger lot sizes, and that should take care of the problem. If the problem, as the regulator sees, is retail, very small retail investors come into the market, and of course, maybe sort of mandate an exam, etc., to test knowledge when you enter the futures and options segment. Thank you very much for joining us. Good chat as always, Sonia.
Okay, well, let's move on. Deven Choksi is still with us, and we have, I think, about less than 10 minutes to go before the pre-opening rates kick in. Deven, I wanted your thoughts on the IT stocks, because tomorrow onwards we'll start talking about them, since TCS and HCL Tech are coming out with their numbers. Ahead of that, would you buy into any of the IT names now?
Well, I guess I think the 2 or 3 more important points, I think, which we will possibly, want to listen from the company's management and the commentary coming out. On one side, I think we see probably the downtrend in the business is getting arrested. So which confirmation, I think, which we want to have it from the companies, if at all, I think that is the reality for across the board. I guess, I think the larger companies, TCS, Infosys included, I think have been winning some of the long tenure contracts with a larger size. I think this is very, very significant, because that gives you a sustainability over a period of time, I think, as far as the business aspect is concerned. Couple of things personally I am also observing. how significantly they're changing their business model from typically a code base or the coder company, I think, getting into the computing space. If that is a approach that they are adopting, then possibility of, I think, you seeing the business model giving better results going forward, particularly in form of, I think, larger contracts coming in from cloud computing space, contracts coming in from the AI space to these companies. I believe that, I think, valuation-wise, they are not threatening, they are not expensive. From a perspective of looking at higher growth and a re-rating in the stocks, I think one would like to see some of the confirmations on the observations that at least I've put across, and I think the research that we are carrying on the subjects.
Okay, all right, Devin, thanks a lot for giving us that comment. By the way, just looking at the block window, appears a couple of those large trades have taken place. Delivery, there's a big block that's taken place in the block window on the BSE. So that's one stock, and I think Nykaa as well, there's a reasonably large size block that's taken place out there as well. So we'll try to get you further details on that front. We were anticipating the delivery one. For the time being, we'll slip into a short break. You come back, we'll get our technical experts as well, who will be joining us on the other side of the short break. Sudarshan and Mitesh are waiting for us.
Okay, welcome back. There is a lot to track this morning. 5 minutes to go for the pre-open session. GIFT Nifty is indicating a flat 10-point higher start. But what will it be through the course of the day, and how can you profit from it? That's the question. Mitesh Thakkar and Sudarshan Sukhani are with us with some answers. Gentlemen, good morning. Good to have both of you here. Thanks very much. Mitesh, just a first sense on the price action, new highs for the indices, and broader markets looking very, very good as well. What's the trading strategy for the Nifty and the indices before we go to stocks? Mitesh, you'll have to unmute yourself.
Good morning again. We've been avoiding the indices for the last few days, I think expecting a sideways movement. And it was surprising to see the price make a new high, though the momentum hasn't. So my sense is that I think, we still would not see a very strong up move happening in the indices. Therefore, focus should be on the stock side. But in case we get a decline close to about 24, 240, 250 levels, I think that's where I would want to hunt for buying opportunities on the Nifty.
Sudarshan Sukhani is also with us. Sudarshan, at what point do you look for fresh buying opportunities? I mean, this is a market that has really not, given us any dip at all to get into. So what does one do now, and what are the stocks to look at?
Well, for a positional trader, you can close your eyes and buy whenever you want. That doesn't matter. But for an intraday trader, there are days when buying is suggested. Like yesterday, I had said, let's buy. And today, for the Nifty, I expect a lot of choppy market action. So for intraday and swing traders, today is a day when you want to buy only if you get a 100-point dip from the opening price. If that doesn't come about, just avoid both the indices. And as I said, for positional traders, this market is going up, buy when you want.
All right, just hold on. That Mankind large trade has taken place at the bottom of your screen. 1% changed out there. Sudarshan, give us some of those individual trading ideas as well.
Sure. Yesterday it was FMCG, and today it's primarily auto. TVS Motor is a buy with a stop under 2320. Bajaj Auto is a buy with a stop under 9400. I also have one intraday short, RBL Bank, which has a stop above 258. And finally, Havells is a buy. It's also a positional buy with a stop under 1850.
Okay, Mitesh, what about you? What would your, stock ideas be for the day?
Well, 3 buys to a sell on the buying side is Hindustan Copper with a stop at 340 for targets of 362. PI Industries is a buy with a stop at 3800 for targets around or above 4000, and a buy on Nestle from the FMCG pack. Keep a stop below 2604. Look for targets of 2720. On the selling side is Bank of Baroda. We had sell calls earlier as well. Keep a stop at 266.5. Look for a target of 250.
All right, gentlemen, we'll talk again. Thank you very much for joining us, Mitesh and Sudarshan. Appreciate it as always. We'll take a break. We are back with the pre-open, which is about a minute away. And we'll come back with some more trades on the F&O side. We'll also have the management of Keystone Realtors, and we put the focus on their business as it stands. Stay tuned.
Welcome back. We have 15 minutes before the pre-opening rates kick in. And no, actually the pre-opening rates are kicking in. We have 15 minutes before the market opens for the day. Looks like it's going to be a good start. I mean, just look at that. The Nifty above that 24,500 mark. Rajesh Palvia joins in. He's the Vice President Technical and Derivative Research at Axis Securities. Rajesh, hi, good morning. What are you looking at in terms of individual stocks? What's on your list for the index itself?
Good morning, Sonia. So, looking at structure, we are still holding our bullish view, and we believe that this momentum can extend further, and possible target for Nifty we can see towards 24,550 to 24,600 also in the continuation of this up move. Looking at the data setup, most of the put writers are still writing at 24,300, 24,400 strikes. So that may act as a immediate support area for any kind of minor dip if we get in the market. Though there is a sector rotation is happening in the market, a lot of sectors which were consolidating is now started participating. So we believe that a broader market may behave on the bullish manner, and a lot of opportunities are there on stock specific. To play this up move of Nifty, we are initiating here to buy 24,450 call option, which was close at around 78 rupees. If you get opportunity to buy this call option around 70 rupees, it's a good level again to re-enter and to buy this call option. We are projecting target towards 130 to 140 for this call option, as we are expecting that this momentum can extend further. You can keep a stop loss of 45 rupees to buy 24,450 call option. For Bank Nifty is still holding at 52,500 level. So major put base concentration is placed at 52,000, 52,300 for near-term structure. So till 52,300, 52,000 are intact for Bank Nifty. Here also we have bullish view. And once we able to take out above 52,800 level, there could be a short covering, and then possible target for Bank Nifty we can see towards 53,300 to 53,400 also. Here we feel that some of the private bank are looking very promising, so that may contribute to this upward momentum. On the stocks front, we expect that pharma space can do well. So Dr. Reddy is looking attractive. The way stock is moving on the daily as well as on the weekly chart, we believe that here we can see a upward momentum. Possible target for Dr. Reddy on the higher side, we can see towards 6650 to 6700. So one can buy Dr. Reddy with stop loss of 65.20. The second stock that we like is Grasim. Very strong buying in last half an hour of trade in previous day. Stock managed to give breakout of last 3-4 days consolidation. So we believe that Grasim can extend its up move towards 28.30, 28.40. So Grasim is buy with stop loss of 27.60. And the third stock that we like is from automobile space, that is Tata Motor. The stock is now closed above 1,000 level, and looking at the near-term structure, we believe that Tata Motor can extend its gain. 1,045 to 1,055 would be the next target. Keep your stop loss at around 995.
Okay, thanks for that. Well, we are heading into the pre-opening rates. So let's just get one quick look at it. Remember, the sensex is now almost at 80,500. So big milestones being hit over there. The Nifty as well, almost at 24,500. And looks like that momentum is something that can continue. There is so much money that's flowing into the Indian mutual fund industry. It's not even funny. Record high AUMs, record high SIPs. And of course, you're going to see that reflect on the market as well. But let's talk about the real estate sector, because there are some niggling worries. The volumes for some of these players have actually fallen year on year and quarter on quarter. Is it an oversupply issue? What's happening with pricing? Keystone Realtors is the first management on the show today. They reported a 22% growth in pre-sales for the quarter ended June, but collections and volumes declined on a year-on-year basis. Vaman Irani, the Chairman and Managing Director at Keystone Realtors, joins us now to talk about that. Vaman, hi, good morning. Always good speaking to you, to understand and get a pulse of what's happening in the market. We've seen a drop in your volumes, both year-on-year and quarter-on-quarter. Can you explain that to us? Is there some demand slowdown that we're seeing? Is it because of an oversupply or just pricing issues? What's going on here?
It's always good to be on your show, but with so many things you're putting up, really none of those are reality right now. The markets continue to stay robust. These are just quarters that we are cyclically attuned to kind of see the responses in. We've done about 611 crores worth of sales in the first quarter. we've collected 485 crores. I mean, the first number, 611 crores, is almost 22% higher than the same quarter last year, and 485 is the same, almost the same amount of money that was collected as of last year. Our projections are well on track. We had guided for about a 3,000 crore revenue this year. We are very well on track for even our launches, having done 2 launches in the first quarter of the year, going more than 2,000 crores. And our BD activity continues to remain strong. Mumbai, MMR as a market, you don't need me to say this, but everybody's aware, is actually a growing market even today. And we at Keystone Realtors, Rustamji, the brand that we drive is a well-accepted brand amongst even the redevelopment as well as the greenfield projects that we do. Our township project will see a couple of launches coming up in this quarter. And as we go along in the year, there'll be many more launches in the western suburbs, which are the strong suburb, for sales in Mumbai.
Okay, so 3,000 crore revenue guidance in FY25. Vaman, I am with you on that. I mean, you just look outside in the city, you see the kind of demand there is for real estate, and you'll understand what the pulse is. But I was just going by the exact data that came out in this quarter, and as you say, perhaps reading it quarter on quarter may not be the right thing. So tell us a little bit about the full year, right? You gave us a revenue guidance. In terms of a pre-sales guidance, what are we looking at? Will you be able to see the kind of 40% growth that you clocked in FY24? What are the numbers? And you have a couple of projects that you've launched in, say, a Virar, a Thane, Juhu, Bandra. When do all of those come up?
So, thanks for that question. Actually, it's our township project, which is there in Thane, like I just mentioned. Thane is going to have 2 project launches or a couple of launches taking place in this quarter and the next quarter. Our Versova project got launched. Our Matunga project got launched in the first quarter itself. We have a few more launches coming up in the Bandra area. We're also looking at Andheri. There is also a strong possibility of being able to launch our eastern suburb large project in Chembur in this year itself. We are very, very strong on our guidance as of right now. 3,000 crores is what we had mentioned, and 3,000 crores is what we will definitely be able to clock. Which will be more than a 25% over last year, and we are pretty conservative on our guidances, and given the market strength, we should be able to outdo that. And so just very quickly, we at Keystone Realtors have raised about 800 crores in a QIP just recently successfully. We have about 300 crores of cash balances, and the projects that are ongoing will also be putting cash into our kitty. So we are very strong on our BD, where we'll have a very strong we'll have good enough dry powder to be able to go out there and get on to get more projects in. Our acquisition strategy is well on track. We are at the same point of time working on the markets in the western suburbs, as well as moving towards the city, which I had last time also mentioned is a very strong market going forward, given the entire infrastructure boost that's taken place.
Oh yeah, I mean, and that's extremely crucial, right, for real estate. Roads and bridges and infrastructure, etc., coming up, and that is coming up now finally. Bowman, hi, morning, Prashant here. I have 3 questions. One is, some have said that in micro markets like Gurgaon, etc., there is a lot of investor demand now. A project gets sold, and we are told, well, a project is sold out in a day, 2 days. A large significant proportion is brokers and just investors, playing for the price appreciation. Can you tell us what is the situation here in projects that you've launched or that you're aware of in Mumbai? Second question, a lot of traditional non-Mumbai players are getting very aggressive here now. Purvankara is here, Prestige is here, DLF is here. They've got significant launch pipelines. So is competitive intensity going up? Go on.
So, very simple. Mumbai has never played as the North has. We've always had very good demand out here. Our developers always calibrate the launches based on a lot more data. I'm not saying the Gurgaon market is anything short of a miracle, actually, where the demand just continues to surge. It just operates in that manner where first round the investors or the brokers come and make their bookings. And then, of course, secondary and tertiary sale keeps taking place where people get a price appreciation. Mumbai has not seen that kind of trend in a long time. We are pretty certain about the kind of end user profile that we are working for. Your second question is always interesting. Mumbai, the market is large. Just to give you a number, 42% of the recognized residential real estate market or thereabouts of the country takes place in the MMR. Why won't it attract developers from all across the country? The good part is these are all good developers who are coming out here, and more organized development will take place. Mumbai has the ability to grow. We welcome this competition because A, they learn, we learn, the market itself grows because they're coming in, because they bring their customers also in over here. We welcome them. We know that the Mumbai market is not the easiest to navigate. They will have their learning curve, and we are just well ahead on them as far as this learning curve is concerned, and very happy to continue growing in this market. There are newer pockets also opening up, like I mentioned, the entire city front, which has not so long not been touched because there was no development out there, except for small little, one or two developers who took interest in that area. Now will open up because of the infrastructure. So there's plenty of room for all of us to grow, and I think organized developers always help to grow the market.
All right. Hi, Baman. Morning and good to see you, Ben. Very quickly, I wanted to get your view on the redevelopment market. You have mentioned in this update as well that you maintain redevelopment leadership and will continue to grow that. But you have other companies, Mahindra Lifespaces, Oberoi, they have also entered this redevelopment space. Do you think that this is the way the Mumbai market will grow now? And as a percentage of your mix, how much will redevelopment account for?
Nigel, you and I both live in Bandra, and we've seen the kind of development taking place around here, right? Do you see any of these names doing any kind of development out here? They are all there. They're all getting into the business as of right now. As I mentioned, Rustomji has been in the business of redevelopment since the year 2001, I think, when we did our first redevelopment project in Bandra. So what I mentioned earlier stands over here as well. There is a learning curve. These companies are finding it absolutely imperative to get into this business because their land areas are being made available only through redevelopment. I think it's a great move. I think all these companies, Mahindra Lifespaces, Oberoi, everyone that you mentioned, including Puravankara, DLF, all of them are going to be in this fray. All of them are going to be doing organized redevelopment. All of them have all of us actually right now have the kind of cash balances that it takes to complete these projects, because that is the most important thing, that you cannot leave a building half done. And we all remember what happened in the year, I would say 2020, when a lot of these buildings were standing like, just standing there gray in color and not getting finished. This time around, that should not happen, and I'm hopeful that with the surge, that the increase that takes place, the market is actually increasing, and all of us will have plenty of room to play. Having said that, leaders always grow the most in markets like this, and I'd like to say that we're ahead of the curve with them.
All right, Baman, appreciate you joining in. You're unperturbed by the competition, but the redevelopment market on the whole will grow as well. Thanks a lot for joining in and giving us all those details. Well, let's get in Sudarshan Sukhani for his call of the day. Sudarshan?
Well, Havells is a buy with a stop under 1850.
All right, Mitesh, you?
I'll go with a buy on Nestle for targets of around 2720.
All right. Thanks very much for those. Let's just look at MCure now. A quick look at the company before the listing. Sonal is here with details. Sonal.
Thank you so much for that. Well, it was a strong subscription, so that could be the stock of the day as well. Total subscription came in at 67.87 times, which was very strong. A lot of interest from NIIs, a lot of interest from QIBs as well. The retail portion, though, was at 7.21 times. Remember, the company has already raised 582 crore rupees from anchor investors. The price range of this issue was 900 to 1,008 rupees per share. The FY24 EPS is at 27. That means at the lower level of the price band, it would be 35 times in terms of value. And the upper band, it would be around 37 times. A table will come up for you on the screen. It will just indicate what the levels of valuation could be, considering the different price levels the stock could list at. Since it was a very strong subscription, it's expected to be a strong listing as well. If it lists at around 1400, it could trade at 50 times. If at around 2000 levels, it could be 73 times as well. And it is a home-grown pharma company, and the other details will be there for you.
All right, Sonal, thanks very much for that. That's a punchy snapshot of what MCure looks like. Strong subscription market starting a little bit flat right now, 10-point change lower. 24,420 is where the index is at. The sensex is down 70 points now. So fast changing screen there. We're about what 80,284, 80,290 now actually. So yeah, I mean, a little on the downside, but flat is how you describe things. A market breadth, look at that. And that tells you, you know, the mood in the market. 1400 are starting higher, 350 are starting lower. Nifty Bank is down about 0.25%. IT index is up about 20 points, 22 points or so. And I think we'll have mid caps and small cap indices also come up on your screen, which will give you a sense of what the start is looking like. But on the headline, it is a pretty flattish start. Sonia.
Absolutely. And, you know, just a couple of stocks, right, that are in focus this morning. Infosys has bagged a 5-year order from Sector Alarm, which is an affiliate of KKR. And of course, ahead of the IT numbers, all of these stocks will continue to be in focus. Adani Ports has got this LOI for a 30-year concession period at the Deen Dayal port. So Adani Ports is holding up now, up almost 0.5%. JSW Steel, its Q1 production is down by 4% year on year, but the capacity utilization is not bad at about 87%, so keep an eye out on that. Havells has announced an expansion with an investment of 375 crores at Alwar. Kim's has acquired a 200-bed hospital in Vizag for 75 crores. So Kim's is another stock, Krishna Medical, that's up almost 3% right now. RVNL, of course, all of these stocks have been in the news. RVNL has gotten a 190 crore order from Maharashtra Metro Rail. So that's another stock looking pretty good this morning, 5% higher on that. And then you have Mankind and Delivery that are in the news as well. On the downside, Delta Corp, well, because of several reasons, casino operations have not been that great. So Delta Corp is down about 1.5%, and Marathon Next Gen is also another stock that we're tracking. The Q1 area sold is down about 45%. But otherwise for the market, it's honestly not bad. Flat, just holding on to its gains from the last many days, is taking a little bit of a breather. The Nifty Bank is the one exerting a bit of pressure, down about 200 odd points, but net, it's not such a bad opening.
Well, that's right, Sonia. A few stocks that are moving around, though. RVNL, that's the big mover. It got a 187 crore order from Maharashtra Metro Rail, so that one's up and about. KDDL, they've announced a tender route to share buyback of around 88 crores at a price of around 3,700 crores. So that stock had opened up well in the green. It's up close to around 2% or thereabouts. A few more big movers, from the broader markets itself. MGL, IGL, we'll get to the management in MGL in just a bit, but those price increases clearly have enthused the street out there. And with Bajaj coming out with the new launch, the CNG launch, it seems the street is building in. Maybe there could be some volume contribution from there as well. So you have MGL and IGL, both of them are higher in trade. On the downside, MCX is down close to around 2.5%. IEX is down close to around 2%. Hindustan Copper came out of the ban, but the street preempted that. For the time being, the stock is down close to around 2% or thereabouts. And some of these fertilizer companies like RCF, that's seen a big run. The stock is up close to around 50% in the last 45 days. That's down a little bit in today's trading session. On the flip side, Hemisphere Properties, I'm not sure what's going on there, but massive volumes at the start of trade. The stock is up close to around 6% as we speak. Prashant.
Mahindra is down, right? Is the biggest gainer with a 5% knock. I'm not sure.
Loser,
yeah, 5%.
You said biggest gainer.
Sorry, 5%. It's a big cut, right? I mean, I'm not sure if there's any news flow per se, but at about 2,800 now on Mahindra and Mahindra, it's like M&M reversed. It's like Maruti reversed from yesterday. Maruti was, of course, the big gainer. And M&M is cutting losses, but still down about 4%. So outsized one, because the next loser is SBI. Number 2 loser is SBI with a 0.5% cut. So it kind of stands out in that sense. Maruti is continuing its momentum. It's up 1.5%. It's the biggest Nifty gainer right now. After yesterday's 7% gain, it's up another 1.5%. So that registration fee waiver in Uttar Pradesh for hybrids working in its favor. Grasim is up about 1.25%, and there is Eicher and Bajaj which are up as well. So autos definitely on the move, both on the upside and on the downside as well. I just look at the broader market for a quick bit. Mankind, I think we mentioned some of this stuff. Mankind is up 3, RVNL is up 4. RVNL is by far the biggest volume-led gainer with a 5% pop. Stocks at about 570. Nigel mentioned MGL. There is IGL, which is up 3% as well, 539. GMDC is coming up with a 3% gain right now. It'll, at about, 425. Supreme Industries, I think, was a brokerage call, 3% higher. Sud highlighted that. 6,200 on Supreme Industries. CAMS is up 5%. CAMS had a very large move yesterday. So from Monday's close, which was 3,700, 3,800. Stocks moved to about 4,200 now in 2 days flat. And actually, not even 2 days, because we're just starting the day here now. Walchand Nagar is up 4%. Vijaya Bank is up just some big volume-led gainers. Nykaa is coming up with a 3% gain. So at about 181, Nykaa has got volumes on it as well. But that's it. I mean, you go down the list, volumes start to dry up pretty quickly. Swan Energy, which was a big mover, which actually has been a big mover all through this year, is down 1.5%. It's got large volumes. There is RCF, Hindustan Copper, National Fertilizer, IEX, GE Shipping. MCX is down 2.33%. MCX at about 37.75. Decent sized volumes to begin the day. Once again. Sonia?
You were mentioning Supreme Industries, right?
Yeah.
The company that manufactures plastic pipes and packaging products, and that one's doing really well, 2% higher now. Jefferies has a buy call, and they have raised their target price to 6,700, which is still an upside to the current market price. Their earlier target price was 5,390. And they speak about how volume growth for Supreme Industries has been so strong, over 20% volume growth. So this is one of those classic plays on, housing, infrastructure, and the fact that the budget is coming up and perhaps something could be announced there. So, some of these ancillary plays as well.
Just one more stock, Greaves Cotton. We had highlighted in our morning chat the kind of delivery-based buying and the big move that we're seeing. The stock has made a 52-week high. Keep in mind, in the last 1 month or so, it's up more than 25%, but massive volumes in the first 3-4 minutes of trade itself. 52-week high on that one.
I mean, it closed last month at 125.
Yeah.
And 175 now. I mean, so that's a pure momentum mover. Big volumes as well for this point in the day, as Nigel highlighted. Well, Manish Gunwani is our market master today. He's Chief Investment Officer at Bandhan AMC. Manish, good morning. Good to have you with us here. Thanks for your time. I mean, I think, mutual funds are all smiles, right? Big inflow.
Yeah, nothing to complain about.
40,000, 43,000 crores and SIP book growing. This is the best of times we've had. Manish, just give us a sense of what you're doing with the flow, though. That's the other part, right? Because all of that money is going in. You can't sit on cash.
Yeah.
And you got to put it to work. So are you expanding the universe beyond what you would traditionally look at, to look at maybe smaller companies and ones where there is some not just the large caps or the top 100, 150, 200 names in that sense. Are you forced to do that, Manish?
We're not being forced. Actually, we've always been of the view that structurally the small cap space is the most interesting space in the market. Now, of course, after such a strong 1 year, if you have a short-term time frame, you should be a bit wary of small caps. But if you have 3-5 year kind of view, essentially our view has been that between the themes of high liquidity, the kind of change we are seeing globally and in India, and the fact that overall macro growth, I don't think will be great globally. If you combine these three big themes, I think we will reach a conclusion that large caps may struggle to report any strong earnings growth, whereas a lot of selective small caps, which play on themes like energy transition, China plus one, consumer discretionary affluent and luxury consumption. A lot of the small caps in these spaces, I think, can compound earnings very fast. And given the high liquidity, I think that's the space which will generate alpha.
Okay. Manish, hi. Good morning and thanks for joining in. Absolutely right. No complaints for this market. But what do you see as the trajectory over the next 1 to 2 years? I'm asking because this market cannot go up endlessly. At some point, the correction has to come. Do you think, if not a price correction, there could at least be a time correction which would allow this market to fall into that range of 12 to 13% gains that we've seen on an average for so many years, right? So, correction to a mean, so to speak. What is the best way for a retail investor to look at it?
No, you're correct. Logically, that's what should happen. It's taking some time, but I think that even if everything else remains superb in terms of macro fundamentals, corporate earnings, we have to remember that equities can't generate excess return over fixed income beyond a point, because at some point, capital will then start flowing to equity so much that the promoters and the private equity funds and global companies will come and supply. So we're seeing, for example, a big auto OEM globally is coming and listing in India because valuations are high. So just because liquidity is high doesn't mean that market will give you opportunities to make money so easily all the time. So yes, I would think that you should be realistic about returns. Next 3, 6, 9 months, markets can be flat, may have a minor negative drawdown as well. But I do think that, again, if you talk about 2, 3, 5 years, given the liquidity, that it is a stock pickers thing in small caps, that if you can find companies that play on big trends and have management that can execute, I still think that good stock picking will get rewarded.
Hi Manish, good morning and good to see you. And since you briefly mentioned autos, I recall you being positive on PVs as well as two-wheelers, if I remember correctly, not so much on CVs. The top gainer on the Nifty currently is Maruti and the top loser is Mahindra and Mahindra. What's your preference from the basket as of now?
No, so in general, I think two-wheeler stocks have done well, and we should remember that this is a fairly penetrated category. So as a fund manager, I don't see too much upside in two-wheelers. Bit of change of view on CVs. I think I'm more positive now than, let's say, 3, 6 months back, because see, usually what happens, CVs have a very severe down cycle and then they recover. But I think in this current cycle, they've got a consolidation phase which has lasted. And end of the day, you're looking at the market relatively. So I'm not saying that CVs are a great distressed valuation, but relative to a lot of other capital goods and cyclical companies, today CVs don't look that bad. I think four-wheelers is a bit of a stock pickers thing. I mean, there are a lot of policy changes happening. Maybe auto anchors are a better way to play because the pace of EV adoption is not very clear at this point of time. And in a lot of OEMs, you then have to choose based on who's got the better EV portfolio, etc. And given the uncertainty around how fast EVs will get adopted, OEMs are a bit of a tough choice at this point of time. Auto anchors have also done well, so nothing is cheap, to be honest. But if you want to do buy and hold patient investing, I think auto anchors in general are better than OEMs.
So, you know, for M&M, right? I mean, of course, the stock has had a very strong run in the last 1 year. Let's not forget that. But remember, yesterday, M&M cut prices of one of their popular SUVs, the XUV 700. Prices were cut by 10% from 21.5 lakhs to 19.5 lakhs. So a lot of analysts say that this signals demand weakness. I mean, you know, so perhaps that could be one of the reasons. But in any case, the stock has also seen a big appreciation. If you look at the last, not the last couple of months, but if you look at the last 1 year, it's been a phenomenal run there. So Manish, for just a follow-up before we move on to the next sector, for companies like M&M, where maybe there is valuation discomfort now, and perhaps there's some demand weakness as well. Do you think that, you know, the time has come to churn out maybe into other pockets like commercial vehicles? Just trying to understand how to move in this space.
So I can't answer for a single stock, but as I said, in general, my view is large caps across, whether it be autos, capital goods, financials. Given that globally GDP is going to grow slower and slower, India will obviously be a relative outperformer, but if global GDP is not going to grow gangbusters, you can't expect very strong cycles to happen in India. So you have to play these small cycles that happen. In that sense, as I said, at this point, auto OEMs, which have done very well for last 12 to 18 months, I don't think there's any big value there, honestly, unless you, as I said, you're able to pick up policy direction on, let's say, EVs and choose a OEM that rides on that policy direction. It's a bit of a risky call. But apart from that, I don't think there are any secular growth at a reasonable price kind of ideas in autos at this point of time. So I think the more powerful theme is energy transition, which is a global theme. The addressable market is higher, but there also stocks are not very cheap. But these are themes you have to keep churning. I don't think this is a buy and hold market. Clearly, valuations across the board are not cheap. Clearly, as I said, you're not going to get very, very strong growth in credit growth or auto sales. So you need to churn your portfolio wherever there is a bit of pessimism. So as I said, I just see some relative pessimism on the CV cycle. And a small bet there may make more sense today than the passenger side.
Okay. Well, a point taken. You know, some of these holding companies, Chola Holdings, for example, is up about 6%. And we've, Bombay Burma and some of these other holding companies have been doing very well. Chola Holdings will come up. It's got large volumes on it. That's the mover today. CESC, the tariff adjustment higher happened yesterday. It's up another 3% this morning. So there are follow-throughs in Maruti and CESC, the two big single stock movers from yesterday's session. There is Manappuram, which is in the mix now. It's up 3.5%. 214 on Manappuram, was not there when we started the session. And of course, I mean, the railway, RVNL, IRFC is another addition. IRFC is up 3. Is the second largest volume traded name. And of course, CAMS remains higher by about 6% or so at this stage. You know, these water companies, water purification companies, Ion Exchange, 4%, Viatech Vabag is up about 2%. So some more stuff which is showing through. Jewelers is another pack. Yesterday, Senco was down 5%. Senco, of course, at the business update, we had the management with us. But others like Kalyan and, even a smaller old name, TBZ, Tribhuvandas Zaveri, these were large movers yesterday. I can spot Kalyan, which is up about 3.5%. So there is, I mean, a fair bit of activity, which is coming up. Manish, for those who are doing it themselves, and of course, there is enough money being handed over to mutual fund managers, but as you say, this is not a buy and hold market. It's a buy and sell and then buy again kind of a market. So you jump from pocket to pocket, trying to find that relative underperformance or relative valuation comfort. So apart from what you mentioned, any other pockets where you find that?
So the 3-4 themes which we like are real estate, pharma, the energy transition, capex. IT, I think, is not too bad, although I'm not very positive, but being underweight IT any longer doesn't seem to make sense. So yeah, these are the pockets where we see relative valuation.
Okay. All right. We'll leave it at that. Thank you so much for joining us. Appreciate your time here. By the way, as we were speaking to Manish, just wanted to get a quick update on what's happening in the market as well. It's not doing too much, to be honest. It's very, very quiet. Just consolidating its gains of the last many days and catching a breath, taking a pause. I think that's the need of the hour. It's been relentless, the pace over there. But let's do one thing. Let's talk about Mahanagar Gas now. The company has hiked CNG prices, remember, by 1.5 rupees a kilo for CNG and 1 per SCM for PNG. The company says the price hike was due to shortfall in domestic gas allocation. To discuss this and more, we have Ashu Shingal, who is the MD of MGL, who joins us now. Ashu, thanks a lot for joining in. Appreciate your time here. I just want to understand what is the reason for this price hike, and with spot LNG prices going higher from here, are we staring at more price hikes by companies like yours? And between domestic and imported gas in terms of raw material sourcing, if you can also help us with what is the split currently?
Yeah, the price hike is mainly because of two reasons. One, that the APM gas allocation has come down substantially over the last 1 year's time, as well as the price of LNG has gone up. So we were getting APM gas, which is at $6.50. From 82%, it has come down to 68%. So there is substantial reduction in the APM gas, which is the domestically available cheap gas. And the LNG prices were earlier down, but now it has started increasing again. So we are constrained to increase 1.5 rupees in the CNG prices. However, still we are the cheapest in the country in terms of CNG prices and PNG prices.
Okay. Mr. Shingal, hi, good morning. Prashant here. So could you tell us, do you anticipate any impact on volumes, you say you're still the cheapest, so I'm assuming no. So what's your volume growth outlook for this year? And what about margins, sir? EBITDA margins? What will this do to margins? Will you be north of 10 rupees per SCM?
Yeah, the volume growth is expected to be better this year because overall the population of CNG vehicle is increasing as well as the CGD infrastructure is also improving. So last year, year on year, we have clocked a growth of around 5.5%. This year, we expect to be more than growth year on year. 24-25 will be more than 7% higher. Regarding what was the other question? Sorry.
Margins, sir. EBITDA margins.
Earlier last year we were 9.5 rupees per SCM. This year it was 13.5 rupees per SCM. I mean year on year. However, going forward, you are right. Maybe we will clock around 11 rupees or 10 to 12 rupees could be the new guidance which we can expect this year.
All right. Hi, Mr. Singhal. Good morning and thanks a lot for joining in. You know, we had a new bike, a CNG bike that was launched from the Bajaj Auto on the last Friday itself. And some on the street believe this could throw up an opportunity. Have you done any back of the envelope calculations? What kind of a volume boost could it be, say, in the next year? Maybe this year may not be too much, but in FY26 onwards, do you think it could boost up your volume substantially?
Not really, because the per bike consumption, the cylinder capacity is only 2 kg. So to see any significant increase in our volumes, the number of bikes should be very huge. So it will take some time. Maybe next year we will get some volume, maybe 2-3%, and afterwards it can increase furthermore. But definitely it will take some time that people are getting used to the new bike, although it is definitely much more advantageous in terms of running cost. As far as Mumbai is concerned, we expect that running a bike on petrol versus running a bike on CNG will be around 40% the cost of running a bike on petrol. So there is substantial saving on running cost. And even the capital cost is not expected to be very high in the petrol bike. So we think this will be going to be a very good segment. And we will be in talk with the Bajaj. Already we are in discussions with them to see how we can help their initiative, because we appreciate this is an excellent initiative to give common men and to people in large who are using bike a very good advantage of a very low running cost.
Okay, all right. The other big event that we're looking forward to is Budget 2024. Is there a possibility of excise duty cut on CNG in the upcoming budget?
We are hearing that, but we don't know for sure, because unless the budget is passed and what is included in the budget or not. The other point which we are hearing is maybe the gas can be included in GST. Because if that so happens, then excise duty cut will not be required. It will be one tax regime for the gas segment itself.
So if it's included, then what kind of a benefit is it for you? You know, if the second part happens, gets included under GST, then what kind of a benefit it could be for you as well as for the industry?
For MGL, it will be a pass-through because any tax is not on our account. It is passed through to the customer. So customer segment, industrial and commercial particularly, will get benefited in terms of they can, if their input tax credit which they get and their product is under GST and the raw material is not under GST, then they don't get input tax credit. So maybe product price will be, they can get some benefit there. MGL, it will be a pass-through. For PNG segment, it can slightly increase the prices because PNG cannot take any, because currently the VAT in Maharashtra is 3%. So if gas is included more than 3%, then maybe there can be some increase in PNG prices.
Mr. Shingle, just to go back to that earlier point on the bike, right? But so, for example, we've had this new bike, CNG bike, and maybe others will also launch bikes. We had UP, for example, which has made registration fee for hybrid vehicles, waived off the registration fee. My point is, and CNG is an important segment, right? Almost 3/4 of your business volumes are CNG. So will this push the network expansion, more CNG stations, etc.? Could you give us a sense of how that is likely to come through? And what are the volumes what kind of volume growth are you expecting for that segment? It's small right now, the bikes per se, but if there is a sustained push all across, could this quicken the pace there?
Yeah, it will take some time. I mean, the volume growth will take some time because of the impact of the bike only. Because around 3-4 lakhs three-wheeler auto is there, and three-wheeler auto takes around 3.5 to 4 kg, around 3 kg per fill, whereas bike will take around 2 kg per fill. So double the numbers will give us maybe 10% volume, but then the numbers of bike should be around 7-8 lakhs, which will take a substantial period to come to that number in Mumbai or in our geographical areas. CGD infrastructure, any which way we are going to increase, because this year we are planning to put up around 85 stations, including Unison 30 and our stations put together. So we are anyway going to increase our CNG infrastructure, either the bike is there or not there. Anyway, it's going to add one more segment, which is a very welcome thing for us, company like CGDs.
Got that. What about the other two segments, sir? The industrial segment, which is about 10% of volumes. How is that likely to grow? Any triggers there?
Yeah, industrial segment, last year we have grown by 12%. This year we are expecting more than 10% once again, because new infrastructure is getting created in Navi Mumbai, Thane and Raigad, plus Unison also. So we are adding more industrial areas into our catchment areas. So more segment is expected to be added. Plus we have designed our contracts more user-friendly, customer-friendly. And the pricing also is done as per their alternate fuel pricing. So we think that the segment in industrial and commercial both will grow more than 10% this year.
Okay, we will leave it at that. Thank you so much for joining us and speaking to CNBC-TV18. That's Mahanagar Gas. The stock is actually up almost about 4% and has been one of the big movers in the last many days. But let's slip into a quick break. On the other side of the break, Rajesh Gupta of Lloyds Metals and Energy will be joining us as the company raises 4,178 crores through the QIP route and preferential issue. Stay tuned on that.
Welcome back. Well, as promised, let's get straight to the management of Lloyds Metals and Energy. Well, the stock has been one of the big outperformers. You know, in the last 3.5 years, the stock is up 35 times. Let's get in Mr. Rajesh Gupta, the MD of the company. Hi, Mr. Gupta. You know, when you talk about this bull market, this stock definitely comes to mind. Imagine you had a market capitalization of around 1,500 to 2,000 crores just a few years ago. Today, from the market, you're able to raise more than that amount. And that too, diluting less than 5% of the total market capitalization. So that's telling you the kind of run that we've seen. And to be fair, you know, the performance of the company has improved as well. So even if I consider last year's 1,800 crores of EBITDA, you're trading at close to around what? 18 to 20 times. So clearly the street is building in much improved performance from here on. Let's get straight to that. You're talking about, you know, forward integration, ramping up pellet capacity, iron ore capacity, as well as becoming a full-fledged steel company. This 4 million ton plant that you're talking about steel, how much of it is, by when do we see the 4 million ton plant? And what is the total capex that you're looking forward to?
Nigel, thank you for having me on CNBC. And thank you for the congratulations for our fundraise. It's one of the biggest fundraisers in a group of two issues. One is the QIP of around 1,200 crores and the 3,000 crores through pref cap. Out of the pref cap, around 1,000 crores is being contributed by by the promoters, showing the confidence that we as promoters continue to have in the business and the valuation of the company. Number one. Number two, you mentioned about the spurt of the share prices. That's something that the street knows better. We as steel makers and iron ore miners have to do our hard work. Like I always say, I'm a lower. Balance aapko dekhna hai. Regarding our going into the steel cycle now, like you know, we are already at 10 million ton capacity, and a part of our investment cycle includes beneficiation of our ore from BHQ ore from 35 to 65% Fe. That would raise our total output over 3-4 years Ultimately, more of BHQ beneficiated ore, but immediately, hopefully from next year, it should be around 25 million tons we should be producing. And with that, we want to capitalize and take advantage of that to make steel. Like we all know, India has to produce 300 million tons. The Prime Minister's vision is very clear, and any growing economy needs a lot of steel.
Right.
The 4 million ton investment of steel itself would be in two plants. One would be at Chandrapur, which is a 1.2 million tons. In various stages, it will start by next year, and by July 26 or so, maybe September 26, that 1.2 million tons should be commissioned. That's a wire rod plant, the first in Maharashtra. Simultaneously, in the other location in Gadchiroli, which is very near the mine, where we have started the first industry in that district in the last 30 years already. We'll be starting up two pellet plants. Again, one will be starting up in by the end of this financial year, and that's the first pellet plant, and the second would start by the end of the next financial year.
Okay.
And subsequent to all of these investments, we are planning a 3 million ton flat products steel plant in Gadchiroli. The total capex cycle, so that 3 million tons is very modern. We hope to have a very modern plant with the maximum green possibility, especially because of our beneficiation. And we hope at least 20% over lesser carbon footprint over other manufacturers because of the iron ore being very rich.
Okay.
And,
Mr. Gupta,
yeah. So
Mr. Gupta, this 3 million ton plant, by when will it be commissioned?
That will be around 28, 29, sir.
28, 29. Got it. Now let's get a few more details. You said your iron ore capacity moves from around 10 million to around 25 million. So for the next year, this is FY25, you had made a request, I think, to increase the mining capacity as well. I was looking at Requirist note. They are talking about 15 million tons in the coming year, and then they're saying you ramp up to around 25 million tons. So should we read that 15 million tons in FY25, and from FY26 onwards, it will be 25 million tons per annum? We're only talking about the iron ore mining for now.
I wouldn't want to give a guidance exactly, but we hope to get that enhanced capacity in iron ore mining by the end of this calendar year, maybe by January. So we can do some pro rata tonnage out of the 25 million tons in the last two months of the financial year. So whether 12, 13, 14, that depends on various factors, but definitely we are geared up for that.
Okay, and you get the total enhanced capacity to 25 million tons by FY26?
Definitely, we hope to do that. We have performed similarly when we went from 3 to 10 million tons. So we hope to get the permissions by that time.
Okay, now this entire capex, 12 million ton of pellet, 4 million tons of steel, hiking up the iron ore capacity to 25 million tons, beneficiation plant as well. What is the total capex? I think it's around 30,000 crores, right?
That's right. Around just little north of 30,000 crores.
A little north of 30,000 crores. You have raised close to around 4,000 crores, including the promoter infusion. So all of this 30,000 crores will be funded via this funding that you have already raised and internal accruals as well, because you want to be debt-free at the end of by 2030. Is that correct?
Yes. Our resolve to remain debt-free is very strong. And with the support of the markets, we definitely will do that. And we hope that this fundraise would help us to reach till the end of the total capex cycle that we are now proposing.
So no more fundraise is what you'll do?
We hope not to, sir.
Okay, and what about this 1,000 crores that you will be putting in as your part of it? Some part of your shares appears to be pledged. So will you be pledging your current holding to fund that, the warrants that you will have to honor?
No, the pledging is, we are like, two promoter groups. So some of the pledging may continue, but we hope not to pledge further shares now.
Okay, no further pledging. Got it. Also, a quick question. You have given us the number of, it could be 12 to 15 million tons for this year in terms of iron ore on an EBITDA per ton, but you have an edge. And that's something that the street likes. What is the rough EBITDA per ton on the iron ore that we should be looking at for this year?
Last year was around 1,800 rupees per ton. given the market, because we have had ups and downs in the price because it's a cyclical industry, I would expect around 2100 or so. But again, it's not a guidance, but just the trend that we are seeing in the market, in the iron ore market in India.
Okay, all right. Final question then. We need to ask you about Sunflag as well, because that's another listed company. They already have a large chunk in the company. And I think you know what's my next question, Mr. Gupta. They have gone ahead and they want they want some warrants. They have gone ahead and they will be taking some part of those warrants as well. I think they're going to be going in for close to 27 lakh shares. What's the ultimate plan with regard to this entity? Have you had a word with them? Do they want to take their shareholding up in Lloyd Metal, the listed entity? And is there a possibility that ultimately you merge both these two entities, because they'll have more than 12% in your listed entity?
With the 27 lakhs infusion, I think the percentage of equity would remain 11% or so, little lesser than what they have right now, of fully diluted equity. We have no plans to, and had no talks with them or with anybody for any merger whatsoever.
All right, got that. A great conversation, and I love that line. मैं तो लोहार हूँ, market, stock price. Thank you very much, sir, and
thank you
for patiently answering the questions. Well, I think 60 points lower, 24,375 is where we are at. And we are actually, market breadth is now significantly negative. That is the one change. There is some profit booking which is happening in the broader market in a not in a very large way, but lots of stuff is down between 4-5% now, and about 1,500 stocks are down. There's about 900 stocks which are higher. So it's kind of turned over the last 10-15 minutes or so. And there is more down than up now. But it's also time for our special segment, Quarter Se Quarter Tak. We get you earnings expectations from from a different sector every day. And today it's a turn for banking in Q1. Abhishek is here with expectations. Abhishek, morning.
Morning, Prashant. So banking sector's Q1 FY25 will be about the outlook that the management gives out with respect to how they see growth ahead in terms of deposit growth, because deposit growth is slowing down for the system as a whole. As on 14th of June 2024, as per RBI, the year-to-date deposits have actually declined by rupees 3.5 lakh crore, or about 1.65% decline. So hence, deposit growth is the biggest challenge for the banking sector as of now. Loan growth as on 14th of June 2024 as per RBI data was at 19.2% on a year-on-year basis, which includes the SDFC Limited numbers which have been merged with SDFC Bank, and around 1.7% with respect to quarter-on-quarter loan growth that we have seen for the industry. So cost of funds will continue to impact the net interest margin for the lenders. Hence, expect the net interest margin to decline for majority of the lenders. Banks will continue to lose out on the low-cost deposits, that is current account, saving account deposits. Hence, CASA ratio is seen at the lowest for many banks in years, as much as the lowest that they are seeing in last 8 to 10 years. That is why, with decline in net interest margin and lower treasury gains, expect the operating profit growth to be on the slower side too. So barring seasonality, asset quality is not much of a worrisome factor for the lenders in Q1 FY25. However, watch out for the pain coming in from the microfinance or the rural segment for the lenders. So recovery from bad loans had been driving the earnings momentum for PSU banks largely. Now it may be on the muted side in Q1 FY25, and that can actually have an impact on the earnings of the banks as well. Having said that, the best of return ratios is clearly behind for the banks. Now key estimates coming in from Kotak Securities are, for SBI they expect NII growth of 8.6% YOY and about 1.5% sequentially, while they are expecting the profit of SBI to decline by 10.6% YOY and 27.1% sequentially. So for Bank of Baroda, Kotak Securities estimates NII to be up 5.3% YOY and a decline of 1.8% quarter-on-quarter. Net profits are expected to be up 0.7% YOY and a decline of more than 16% quarter-on-quarter. Now for SDFC Bank, I have taken only sequential numbers because of the merger of SDFC Limited with the bank. So they are expecting NI growth of 3% on a sequential basis, while net profit to decline by 2.7% quarter-on-quarter. For ICICI Bank, Kotak Securities estimates NI to increase by 5.2% YOY and about 0.4% sequentially, while the profits are expected to be up 8% on a YOY basis and a decline of 2.5% sequentially. For Axis Bank, Kotak Securities estimates NI growth of 8.9% YOY and a decline of 0.5% sequentially, while net profit is expected to be up 4.2% YOY and decline of more than 15% sequentially. Back to you.
Okay, thanks a lot for that. Well, Sameer Bhise, the banking research analyst at JM Financial Institutional Securities, is joining in now. Sameer, hi, good morning. All eyes are going to be on the banking sector, right? Given the kind of momentum that this space has seen in the last couple of months and the leadership that it has assumed once again. But you tell us, what are the key highlights of this sector? And between private and PSUs, how are you positioned now? Sameer, I think you're on mute.
Yeah, hi. Sorry.
Yeah, go ahead.
Thank you. Thank you for having me on the show. So I think price action aside, we continue to see slightly challenging environment on the deposit side for the sector as a whole. And it has prolonged for a reasonable bit of time. In that context, I think it is important to see that how revenue growth, that is NII and fees, translates into PPOP growth for most banks. Our view, first half is likely to be largely soft on a PPOP growth perspective. And probably towards the second half of the year, when the high margin base of last year is not there, we should see some bit of respite on a PPOP growth perspective. So if you ask me on the near term, maybe this quarter and the next, you should have some softness in numbers, which is why we remain slightly cautious on the sector as a whole. Large private banks, especially ICICI Axis, relatively better placed with respect to growth as well as margins. HDFC Bank, while the numbers were soft, we think the worst of margins should probably be behind, and it will probably remain range bound in the near term. Overall, I think deposit growth is what we are watching. Also, on the asset quality side, some initial signs of inch up on credit costs for spaces which are now widely known, maybe a bit of microfinance, and as well as some bit of inch up in unsecured. So I think that will effectively drive higher credit costs, lower margins. So the only lever which probably most banks have is towards operating expenses, which were running high for last couple of years. Some moderation there will be utilized to protect the ROA levels. That is how we are seeing the overall space.
Okay. So what is, in terms of the valuations, how are the valuations stacked up now, even if there is some moderation, even if profit growth is slower across the sector, right? Do you think there's enough valuation headroom for stocks to move up in the private sector space?
So in terms of valuation headroom, I think I would agree that valuation downsides are limited given the rest of the market has moved the way it has. So this sector probably stands out where valuations are close to long-term averages. But we are of the view that the valuation is there for the right reasons. You will need respite on the macro front, especially deposit growth, which effectively drives your potential credit growth. For stocks to re-rate, you will need improvement on that side.
Got it. That's the listing, by the way, for MCure. And I think the listing has happened at about a 30% premium on top of the issue price for 31%. The other one is Bansal Wire, which has also made a debut on these stock exchanges. So two listings today. Bansal Wire is up about 40% on the issue price, and MCure Pharma is up about 34-35% now. And significant volumes, half a million plus shares on Bansal Wire and about 300,000 shares on MCure, which of course was the more high profiles. Both were of course subscribed well. MCure was subscribed some 70 times on an overall basis, and so I mean it's a decent start coming through. Eddie, Sameer, hi, good morning. Now across your coverage universe, banks, non-banks, etc. By the way, you have a new initiation as well, right? Muthoot Microfinance. where you've sort of initiated coverage with a buy, etc. Give us some ideas, Samir, around earnings, beyond earnings.
So I think
yeah.
We continue to like ICICI Axis in terms of numbers and valuations where they are stacked. ICICI has been the sector leader so far and should remain the way it is going right now. We are happy to see mid-teens or low-teens kind of PPOP growth for both these names for the full year, which itself puts them in a relatively strong position versus other sectors. Some of the smaller banks, we are still watching the credit quality on how credit costs shape up, as there are initial signs of some bit of inch up in credit costs, and we will see where they settle over the next couple of quarters. But broadly, if one has to ask that when the sector probably goes back to the valuation upsides that they had seen earlier, I think it is still some time away in my view.
Outside of these two names, anything else?
We like SBI too. I think on the PSU banks back, I think so far remains the best play.
Okay, SBI, got it. Now for SBI particularly, right? I mean, it's been almost a 15% gain that SBI has seen in the last 3 to 4 months. In terms of valuations in the PSU banking space, is there a lot of legroom for SBI compared to its peers?
So I think one has to look at it in the perspective that ROA has been expanding. And even if one were to adjust for the recoveries and write-backs that they have seen from past book, the core ROA is also inching up. So to that extent, SBI now suddenly has a growth upside vis-a-vis what is happening in private sector banks. So they can continue to grow at 15-16% and also drive 1% plus ROA, which puts them in a reasonably strong shape. And hence the valuation re-rating can be justified versus what was the recent history.
Okay, Samir, we'll leave it at that. Thanks a lot for joining in. Appreciate your views on the sector and how to approach it. Well, let's do one thing. Let's take a quick commercial break. On the other side of the break, we'll put focus on the commodity markets. Manisha Gupta is joining in. Stay tuned. Welcome back. Let's get a quick run through on what's happening in the markets. It's actually not a bad day. It's a little bit subdued, down about 0.2%. Little bit of pressure on the index, down about 65 odd points, but par for the course really, given the kind of trajectory that we've seen lately. Mitesh Thakkar is joining in now to tell us how to approach the markets. Mitesh, it's been a phenomenal run. A lot of milestones have been hit. But for the rest of the day, what are you penciling in and what are the stocks that one needs to look at?
Yeah. So I think, yesterday, as it made a new high, the Nifty, I think it did surprise me because there was lack of momentum and I was suspecting that the new high may not last and we might actually get a dip. So that's playing out. Now, the first support of 24,350 is right there. In case you break that, I think another 120, 130 points could happen in the next 1-2 days. So below 24,350, expect 24,240 thereabouts. And in the worst case scenario, we might even test 24,180, 170 zone. So I think the market could give some kind of a pullback is my overall feeling. Therefore, we are looking at now exiting long positions and exploring some shorting opportunities. EU Bank is one name which is looking weak. So that's a sell. Keep a stop at 642. Look for targets of roughly around 610 to about 605 on the downside. And after a long time, after a good rally, Coromandel could also give some kind of a pullback. So sell here with day's high of 1617 as the stop loss. Look for 15, 10, 20 as your pullback.
Okay, all right, Mitesh. By the way, Mitesh, in the broader market today, right? I don't know if you're seeing there's a fair bit of pressure, lot of pullbacks, well traded names, which are down 3, 4, 5%. I mean, I can spot at least, 25, 30 names already with decent sized volumes.
That's right, Prashant. In fact, the entire pack, which was the mid-cap pack and the PSU banking names, and we've had sell calls on Canara Bank and Bank of Baroda earlier. I think the entire pack looks like it's extremely overbought and now is ready to give a pullback. The intraday indicators are suggesting some kind of a mild breakdown. Therefore, I think Next few days could be slightly on the negative side. If people have, this is a good time to take profits and exit long positions. If somebody wants to short, I think, we've been giving stop losses and calls with targets, etc. I think those can be followed. But the overall feel is that next couple of days could be more on the corrective side for the space, which has done very well in the last couple of weeks.
Okay, well, thanks a lot for that. Let's do one thing. Let's focus now to the commodity markets. Manisha has been waiting by. Manisha, what's the one commodity that we should be looking at today?
So now I'm looking at the soft commodities. Pardon me, the latest FAO data also shows that the industrial agriculture commodities also have kind of softened in the month of June there. Of course, there has been increase in vegetable prices within India. Vegetable oil prices, sugar and dairy products have seen an increase. But various other important essential commodities actually have seen a decline in the last 1 month or so. I will start with vegetable oil itself. And palm oil prices is one which has seen slight rise in prices. There is firm demand from India and various other countries. And the biofuel sector also seems to be supporting demand from this one. Rice is something that has seen a constant decline in prices. In the international markets, we have the prices trading at a 3-month lows. For the Indian markets as well, there is a surplus now. And with the kind of sowing that India has done, the expectations are of a bumper rice crop. And the government is looking to take off some of that stock that they have. So this is one thing that seems to be impacting the international markets as well, that India could be lifting export restrictions by the time you are looking at end of July. The new rice will start coming in from the month of October. So that is what the world is watching at. For the global markets also, it's higher supplies, lower demand. And the world agri supply and demand estimates, if you look at those numbers, also do show that you are looking at stronger numbers there. We are looking at nearly a higher number in sense of 3% when it comes to year-on-year basis. Not just rice, cotton prices in the international markets are trading at a 4-year lows now. There is favorable weather in the US markets. Indian prices right now are trading at a 2-year lows also. And weak export numbers is something that continues to weigh on. Also globally, 2024-25 as a year indicates an increase of nearly 90,000 bales of an excess in the international markets. That is keeping those prices in check. Moving on, you have sugar prices which also are trading below 20 cents here. The strong monsoon that you have seen in Brazil, Thailand, India does indicate that we are looking at a better crop this time around. Brazil actually is looking at much higher crop as compared to the previous year. Output is estimated to increase by 1.3%, and India is looking at a sugar surplus of 3.6 million tons. All of those factors keeping the prices in check here as well. The only thing that perhaps is seeing gains has been the coffee prices. We are trading at a 2-year highs onto this one. Vietnam coffee exports for the month of Jan to June have seen a very sharp decline of 10%, and below average rains in Brazil also seem to be keeping the prices higher. So if you keep coffee aside, almost all other soft commodities have seen a decline for the month of June, and July has started on a weaker note as well. If you look at the last month prices, we've seen soybean decline 1.5%, sharp cuts coming in for cotton. Ditto is the case with rice as well. If you look at the sugar prices, well, that saw some gains in the month of June, up by nearly 5.5% onto that one. Coffee, of course, is a gainer, as I told you, up by 12%, but almost all other commodities trading in the negative on a week-on-week and a month-on-month basis.
All right. Thanks very much for that. That's a commodity update. RVNL was one of the top traded stocks with volumes. It is actually 8% higher. Vivek is here to tell us why. Vivek.
Well, in an otherwise weak market, RVNL, has been the standout. So what's actually happened is that some time ago, there were talks that India, especially as far as the rail corridor is concerned, India will be present both in Middle East as well as the African nations. So there has been one MOU that RVNL has signed. Number one, they've gone ahead and signed an MOU with a company called Tatweer Middle East and Africa LLC. Now, this particular MOU will be using RVNL's expertise in railway sector, where RVNL, will assist the company in joint design and execution of various rail-based work in the MENA region as well as European countries. Right now, it's just an MOU. Also, there's another bit of development that RVNL has informed the exchanges about. They have received an LOA from Nagpur Metro for construction of 6 elevated metro stations. Order size is close to 187 crore. Our time period for construction is close to 31. Some positive news flow for RVNL, keeping the stock up to date.
Okay, thanks a lot for that. And if you're wondering why M&M is under so much pressure today, automakers like Tata Motors and M&M have gone ahead and cut SUV prices across their SUV range. So M&M has cut XUV 700 prices by 10% from 21.5 lakhs to 19.5 lakh rupees. Tata Motors has cut the starting prices of Harrier and Safari till the 31st of July, cut the prices of Harrier to 15 lakhs from 15.5 lakhs earlier, and Safari prices have been cut to 15.5 from 16.5 lakhs earlier. Now, analysts say that this signals demand weakness in the SUV space, and that is a big concern now. Apart from that, if you look at it, demand in general has been under pressure in the passenger vehicle space. There was a notable decline in June. So if you look at the FADA data, PV industry sales are down 7% year-on-year and 7% month-on-month in June. But what's going wrong in the sector? One thing, of course, is the extreme heat has resulted in a 15% decline in the walk-ins in dealerships. So that is one thing. Then, of course, the monsoon delays, etc., impacting rural areas. But dealer feedback highlights challenges like low customer inquiries and postponed purchase decisions in the passenger vehicle space. And to top it all, stocks like M&M have rallied quite a bit. So if you look at the valuations, M&M is now trading at 22.5 times FY26 PE. So slowdown in demand along with valuation discomfort is what's causing a 6% knockdown on that stock. But let's do one thing. Let's take a quick break. On the other side, Lata will get chatting with Nischint Chawate of Kotak Institutional Equities to put focus on the NBFC business updates and the Q1 earnings. Stay tuned.
We continue with our quarterly results review. You just heard about the banks. Now on focus are NBFC companies. Early numbers from companies like Bajaj Finance have shown a very strong growth in loans. Companies like MMFSL have, on the other hand, shown stress in the form of lower collection efficiency. So what are the retail credit demand trends for the sector as a whole? Will they show margin pressure due to higher cost of funds? And what about the stress that we hear in unsecured loans and microfinance come in pockets? For all these questions, I am joined by Nischint Chawate, the Director, Kotak Institutional Equities. Good morning, Nischint.
Thanks.
Pleasure having you with us. Well, for starters, overall, I'm reading from your own report, you're looking at very strong credit growth in companies like Bajaj Finance, Cholamandalam, etc. So good in terms of top line, would you say?
See, the answer is in terms of loan growth, yes, but a large part of it also comes in because of the run rate that you have been doing over the last couple of quarters. I think from a disbursements point of view, typically 1Q seasonally has or tends to have some element of weakness, which our sense is may be there this year as well. In addition to that, there have been sound bites about excess heat wave or, for that matter, election-related kind of a little bit of weakness in collections, and which is where first quarter could be slightly soft in terms of disbursements. On loan growth, I guess, it kind of starts playing out over a period of time. Now, the question is whether this is a seasonal weakness or is it something which is an early sign of, some kind of softening of demand. I think, as you rightly mentioned, in your opening comments, that there have been pockets of stress. So the question really comes in is that, for the secured lenders that, typically we have coverage on, whether this is an early sign and it's going to spread to the secured ones, or is it something that any disbursement weakness in the secured ones is just going to be a function of a seasonal trend. I think that's something that is going to be very crucial in the management commentaries.
Okay. Well, actually, we just saw Sonia, my colleague, highlighting that people have dropped SUV prices, Tata Motors and M&M. Therefore, is there a worry that overall loan growth might taper off? What is the loan growth picture generally, and which companies would stand out?
What happens, especially with retail credit, is that loan growth, disbursement growth is a leading indicator. Loan growth kind of starts getting, or it's essentially a lagging indicator. So it starts getting reflected over a period of next couple of quarters. Okay. So we, in terms of absolute loan growth, I think we'll come to know over a period of quarters. Disbursements growth may be slightly soft this quarter, but that's fine, given the fact that there may be seasonal weakness. So the weakness that we see, is it seasonal or is it something which is an early sign? I think that's something which we'll have to figure out. Loan growth will kind of come.
Okay. Disbursements were weak for Poonawalla FinCorp. I'm just reading out from the notes of companies that have reported the pre-quarter numbers. Bajaj Finance looks strong. Even L&T's retail finance disbursals are up 32.5% YOY, though they are down quarter on quarter. But then, as you point out, it is a soft quarter. But Nischint, let me come directly to your recommendations. I'm a little surprised that you don't have companies like Bajaj Finance in your list. Your best bets are Shriram Finance and Muthoot. I'll come to the home guys in a minute. Why have you not picked up, say, Chola or Bajaj and preferred Shriram, Muthoot, etc.?
No, so Bajaj, we are restricted at the moment. So that's where I think you can see an NR rating over there. We do, have been covering the stock in the past. Chola, I guess it's just that because of the valuation, you can see that there is not much of a gap between the fair value and the current market price, simply because of the way the stock has rallied. Shriram is in a reasonably well position. Valuations are obviously better than or lower than some of its peers. In terms of growth trajectory, the company has been doing fine. And most importantly, if I look at the buffers on balance sheet in terms of the overall provisioning cover or what we call as ECL cover, they are far ahead of peers. So to that extent, I think there is a fair amount of buffer that's built in the balance sheet versus the initial expectations of Shriram at the time of merger on growth and profitability. I think the company has done far better. And even on profitability, they seem to be marching ahead.
Okay. Let me quickly come to the home financiers. You like Aavas and Home First. Why not India Shelter? Those numbers also look good. Small company, but it looks good.
Yeah. So we do like India Shelter as well, right? So we do like all the three names.
Okay.
It's just that the other ones are larger, that's all. Yeah.
Oh, okay. All right. And gold financiers?
Yeah, so we have a coverage on Muthoot. So two things are happening there. One, gold prices have been, sort of on a roll. And that kind of directly helps Muthoot. And the other thing also is that, some of these gold financiers are gaining market share from other NBFCs, or for that matter, even banks probably are less aggressive than what they were earlier. So, it's going to be a combination of probably market share gains plus your strong gold prices, which will drive, strong loan growth for Muthoot. Again, in terms of margins or realizations, Muthoot kind of had some reversals last year because of loans that they sold to ARCs. And I think as those loans kind of get redeemed, we'll probably see some realization benefits as well. Generally, in a strong wicket, the big concern on gold loans was that there was too much of competition and they are losing market share. I guess that kind of a concern is now slowly and steadily receding. And gold prices have also been reasonably strong recently. RBI was a little slow in giving licenses for opening new branches to gold loan companies, which has, I think, also started to change. So that's where I think, Muthoot seems to be in a sweet spot, right?
Oh, yes. Yeah. I think IIFL's problems could well be Muthoot's gains, for all you know. Nischint, what is your... you pointed out that you will look out for any stress in unsecured loans and MFIs because we hear anecdotal evidence. Which are the companies you would avoid because of this? So,
microfinance companies, so we don't really cover any of the microfinance companies, in that sense. So it's already not in our coverage. Most of the companies or a host of companies that we cover do have unsecured loans in small pockets. And I think we'll try to get a sense on their commentary in terms of how they are approaching them. Having said that, unsecured in Chola or Shriram is a very small proportion. So it's not something which is alarming. But nevertheless, I think their strategy in terms of how they are looking at it, how they, what are the trends that they are seeing over there is something we'll watch out for.
Okay, I'll just come back to them if possible, if time permits. Do you also cover the capital market companies, the AMCs and people like KFin and CAMS? Is that also under your coverage?
No, that's another colleague of mine who covers it.
Okay. But I believe you all have a positive coverage on the AMCs and on KFin and CAMS. Obviously, that's very obvious from the way in which capital market activity has been up and about in the past 6 months, or definitely 3 months. Let me ask you about margins. We've heard banks complain about the high cost of deposits. That should logically affect NBFCs as well. Will there be pressure on margins?
See, the point is, most of the most of the rate transmission is already got reflected in the borrowings cost of NBFCs. So on a sequential basis, what we are really building in is nothing more than 10 basis points of rise in borrowings cost. Incremental cost of funding for most of these NBFCs has been stable for the last 2 or 3 quarters. So incrementally, do we see NBFC, that bank lending cost for NBFCs going up? The answer is no. So most of that transmission has already happened. Yes, what NBFCs are consciously doing is they are adding new sources of funds. So they are kind of looking at, foreign borrowings or mutual funds, etc. Even if that comes at a slightly higher cost, they may be okay to do it, given the fact that it's giving them a more diversified borrowing space. So that's where you could probably see a little bit of an inch off of funding cost. But broadly, it looks like funding cost is now more or less stabilized on a sequential basis.
Well, right now, Reserve Bank has not shown any inclination to increase, say, risk weight or any other negative on capital market exposure or on, lending to the stock market. But the way in which the authorities in general, SEBI, RBI and the government are going against F&O volumes and other equity market surges, which are the companies you would put on your watch list?
None of the ones that we cover are, see, if you look at any of these, larger companies, they are mostly focused on vehicles, business loans. Okay. You've got specialized home loans companies. So none of them are,
you would have things like IIFL. Won't those be exposed to, won't they have high capital market exposure?
So we don't cover IIFL, but my understanding is that they don't really have large capital market exposure. See, capital market exposure is a much smaller part of the overall system now, right, as compared to some of the other asset classes. So, even if some companies are doing it, it's much smaller proportion. So, I don't
it may not affect that. Yeah, I take your point. And even IIFL is more a wealth manager and not perhaps lending to, margin funding, etc. Point taken. Overall, are you all positive on NBFCs, your best picks?
Yes, so the general view is yes, positive, but we obviously, acknowledge the fact that stocks have run up a lot. So the upsides are much lower now than what they were probably let's say a quarter back. As you kind of highlighted or summarized, we are essentially, Shriram, Muthoot are the best bets for us, and Awas and Home First essentially on the affordable side.
All right, we'll leave it at that. Nischint, always a pleasure speaking with you. Thank you very much. So Nischint is not quite Nischint on all the NBFCs. He will worry about what the commentary will be on stressed loans, especially in the MFI space. With that, we wind up on this edition of Bazaar. Thanks for watching. Chartbusters coming.